welcome to The Explainer. So let's talk about something we all think is safe, money in the bank. But what if I told you that keeping all your cash in a savings account might actually be a losing game? Today, we're diving into our source material to explore exactly why that is, and we'll look at 7 different assets that could be a much better and safer bet for your future. Okay, let's kick things off with this quote from our source material. It's pretty provocative, right? One of the biggest lies banks tell us is that our money grows in our bank accounts. This really gets you thinking. I mean, you see the number go up, you see the interest payments, tiny as they are, but is your money actually growing? Or is something else happening behind the scenes? And that brings us right to the heart of the problem. You know, it feels like it should be simple. You work hard, you save your money, and you expect it to be there for you, maybe even grow a little. But there's this invisible force, this economic headwind that's constantly pushing back against your savings. So here's the problem in a nutshell. Look at this. On one side, you've got the interest the bank gives you. Usually it's pretty pathetic, right? And on the other side, you've got inflation, which is basically the cost of everything. Your coffee, your gas, your rent going up. And here's the kicker. If inflation is rising faster than your bank interest, your money is actually losing its power. Your savings can buy less this year than it could last year. You're effectively losing money, even while it's sitting safely in the bank. Okay, so if just leaving cash in the bank is a slow motion disaster, what are you supposed to do? Well, the first big idea from our source material is to look at investing in tangible things. We're talking about assets you can literally see and touch. And the first one up is a classic, precious metals like gold and silver. So why are they so valuable? It really comes down to one word, scarcity. Think about it. A government can print trillions of new dollars out of thin air, which can devalue the money you're holding. But they can't print more gold. There's a finite amount of it on the planet, and that's what makes it such a solid store of value, especially when the economy gets a little shaky. And, the best part is you don't need to be a supervillain with a secret vault. You can easily invest in gold through things called ETFs. They're basically funds that trade on the stock market like any other share. And just look at this timeline. It's pretty amazing, right? We're seeing gold go from, around $400 an ounce before the 50s, all the way up to $2,000 today. And some projections are even forecasting it could hit 10 grand in the next decade or so. This really shows you how gold has acted as a powerful shield against inflation over the long haul. All right, next up we have industrial commodities. Now, these are the raw materials that actually build our modern world. And a perfect example is cobalt. Why cobalt? Well, it's a critical component in the batteries for electric vehicles. As you can see here, the price basically doubled in 10 years. So when a new technology explodes in popularity, the demand for the stuff needed to build it can go through the roof, making it a really interesting investment. And then, of course, there's real estate. You've probably heard the old saying, buy land, they're not making it anymore. And that's really the core idea here. Our population keeps growing, but the amount of land on Earth stays the same. That simple fact of supply and demand makes it an incredibly powerful long-term asset. Now, you might be thinking, great, but I don't have $1 million to buy a building. And that's the cool part. You don't need to. You can invest through something called a REIT. That's R-E-I-T. Basically, think of it like buying a tiny slice of a giant property portfolio. Maybe it's apartment buildings or office towers or shopping malls. It makes investing in real estate accessible to just about anybody. Okay, so we've talked about physical stuff. Now let's shift gears and look at assets that are actually woven into the fabric of the global financial system. Think about it. When a storm is coming, where do you go for shelter? It's the same with money. When there's a global crisis or a lot of uncertainty, investors rush their money to countries that are seen as incredibly stable and secure. And that's why the Swiss franc has this reputation as a safe haven. It's like a financial storm shelter, backed they're one of the most solid economies on the planet. Okay, quick definition because this is important for our next point. What is fiat currency? Well, a long time ago, a US dollar was basically a claim check for a certain amount of gold in a vault. But since 1971, that's not true anymore. Today, the dollar's value isn't backed by gold. It's backed by the full faith and credit, basically the trust and stability of the US government. Your money is really only as strong as the government behind it. So that leads us right into this idea of a sovereign guarantee. What does that mean? It's actually pretty simple. You are lending your money to a government. When you buy things like US Treasury bonds, that's what you're doing. And it's considered one of the safest investments in the world because, well, powerful, stable governments almost never go bankrupt. Now, the key word there is stable. You want to stick with governments that have a long track record of paying their bills.
All right, let's talk about the stock market. Our source draws a really useful line between two kinds of stocks. On one hand, you have growth stocks. Think of these as the flashy, high-flying tech startups. They could be the next big thing, or they could crash and burn. High risk, high reward. Then you have value stocks. These are the opposite. They're the big, boring, established companies that have been around forever. They're not going to double in value overnight, but they offer steady, reliable growth, and they often share their profits with you in the form of dividends.
And just like with real estate, you don't have to be a stock market wizard to do this. You don't need to spend all your free time analyzing company reports. There are mutual funds out there designed specifically to hold a whole bunch of these solid dividend-paying value stocks. You can buy in and get instant diversification. Okay, for our last category, we're taking a sharp turn into a world that's, well, a little more unique. We're talking about investing in things whose value is based on one simple, powerful idea: rarity. We all know that a brand new car starts losing value the moment you drive it off the lot. Well, with collectibles, it's the exact opposite. Things like vintage cars, rare art, even old comic books, they can get more valuable as they get older. They become these, as our source puts it, timeless repositories of value. And if you're wondering just how valuable rare can be, get a load of this: 135 million euros. That was the selling price of a 1955 Mercedes-Benz. Why so much? Because it was one of only 2 ever made. That's the power of unique rarity. And if you think that's mind-blowing, check this out. $450 million for one painting. When you get to the level of a true masterpiece by someone like Leonardo da Vinci, the price tag can just go into the stratosphere. There's only one, and people are willing to pay for it. So obviously, most of us don't have a spare $500 million laying around. But here's the really important part. This world is opening up. You can get into collecting with smaller things like trading cards or comics on online sites. And there are even new platforms now that let you buy a tiny share of a multi-million-dollar painting. It's called fractional ownership, and it means you don't have to be a billionaire to own a piece of a masterpiece. Wow, okay, so we've gone all the way from gold bars to priceless art. That's a lot to take in. So let's just step back and summarize these alternatives to just letting your cash sit in the bank. This table really lays it all out nicely. You want an inflation hedge? Look at precious metals. And gold ETFs are an easy way in. Want something that benefits from scarcity and demand? That's real estate, and you can use REITs. Looking for more stable growth? Value stocks through mutual funds are a great option. And if you're intrigued by the power of rarity, you can dip your toe in with fractional ownership of collectibles. The big takeaway here is that there are options. It's about looking beyond that basic savings account. So we're gonna leave you with this one final thought from our source material, and it's a big one. You work hard for your money, right? So after everything we've talked about today, about how inflation quietly eats away at your savings and all these different ways to fight back, the question you really have to ask yourself is this: is my money working as hard as I am?